Imagine a world where your money possesses the extraordinary ability to grow and multiply exponentially over time, paving the way to unimaginable wealth. Today, I invite you to explore the fascinating realm of compound interest, a financial principle that can transform small investments into significant financial achievements. In the landscape of personal finance, one concept stands out as a proven pathway to long-term wealth creation: compound interest. This powerful idea revolves around reinvesting your earnings, allowing them to generate additional returns over time. By harnessing the power of compound interest, individuals can accumulate substantial wealth and achieve financial freedom. In this video, we will delve into the principles of compound interest, its benefits, and explore some of the best assets to invest in for growth through this remarkable financial mechanism. But first, let's clarify what compound interest truly is. Often referred to as the eighth wonder of the world, compound interest has a remarkable ability to make investments grow exponentially over the long term. It involves reinvesting profits, dividends, or interest earned from an initial investment, allowing them to generate additional returns. The magic of compound interest lies in its capacity to generate gains, not only on the principal amount, but also on the accumulated returns. As time progresses, this compounding effect accelerates, leading to significant wealth accumulation. Think of it as a snowball effect in wealth building. To fully grasp the potential of compound interest, let's consider a practical example. Imagine you invest $10,000 in an asset that generates an average annual return of 8% over a 30-year period. In the first year, your investment grows by 8%, adding $800 to your initial amount, bringing the total to $10,800. In the second year, the 8% return is applied to the new total of $10,800, resulting in an additional $864. The total value now stands at $11,664. As the years progress, the growth becomes increasingly significant due to compounding. By the end of 30 years, your initial investment of $10,000 could grow to approximately $116,026. This illustrates how interest is earned not only on the principal, but also on the accumulated interest from previous years, dramatically amplifying the growth potential of investments over time. Now that we understand what compound interest is, let's explore 7 of the best assets to apply it to, which have contributed to the wealth of many prosperous individuals today. Stocks. Investing in stocks is a popular long-term strategy for wealth generation through compound interest. Historically, the stock market has outperformed most other asset classes over extended periods. Companies with consistent growth and strong financials tend to deliver superior long-term returns. By investing in a diversified portfolio of fundamentally sound companies, you can harness the power of compound interest. For instance, if you invest $10,000 in a diversified portfolio of stocks with an average annual return of 8%, after 10 years, your investment could potentially grow to approximately $21,589. High-yield savings accounts. These accounts offer a higher interest rate compared to traditional savings accounts, making them an accessible way to accumulate wealth. While the returns may not be as high as other investment options, they provide a safe and easily accessible way to benefit from compounding. For example, if you deposit $10,000 into a high-yield savings account with a 2% annual interest rate, over 10 years, your investment could grow to around $12,189. These stocks distribute a portion of their profits to shareholders in the form of dividends, offering the potential for capital appreciation and passive income. By reinvesting dividends to purchase additional shares, investors can accelerate the compounding effect. A prudent strategy is to select well-established companies with a history of increasing dividends over time, often referred to as dividend aristocrats. Real estate. Real estate investments, particularly rental properties, can generate consistent cash flow and appreciate over time. Rental income can be reinvested to acquire more properties, further diversifying your portfolio. For instance, if you buy a rental property for $200,000 with a 20% down payment and it generates a net annual rental yield of 6%, the total return on investment after 20 years could surpass $500,000. Bonds. Bonds are financial instruments issued by governments and companies to raise funds. While they tend to offer lower returns compared to stocks, they are considered safer investments. Bonds provide a regular stream of income through interest payments, which can be reinvested to compound wealth. For example, if you invest $100,000 in a bond with a 5% annual interest rate, reinvesting the interest payments could significantly increase your investment over 10 years. Precious metals. Investing in precious metals like gold and silver can be a strategic addition to a diversified portfolio. While they don't generate regular income, their value tends to appreciate over the long term. Allocating a small percentage of your investment portfolio to precious metals can provide protection against inflation and market volatility. Index funds and ETFs. These investment vehicles track specific market indices, offering diversification across a wide range of assets. By regularly contributing and reinvesting dividends, index funds and ETFs can compound long-term returns. For instance, a $20,000 investment in an index fund with an average annual return of 7% could grow to around $67,275 over 20 years. Now that you've learned about these 7 assets, let's highlight the key benefits of compound interest. Time is your ally. The earlier you start investing, the more time your investments have to grow and compound. Passive income generation. Compound interest allows for the generation of passive income as gains are reinvested, creating a cycle of additional returns without active work. Inflation. Mitigation. Investments that generate returns above the inflation rate help preserve your purchasing power over time. Psychological benefits. Observing the growth of your investments can foster patience, reinforcing the importance of staying invested and avoiding impulsive decisions based on short-term market fluctuations. In conclusion, compound interest requires time, discipline, and a long-term perspective, but it has the potential to secure your financial well-being and enrich you over time. Take control of your financial destiny and watch your wealth grow. By understanding the principles of compound interest and strategically investing in various assets, you can unlock the potential for long-term wealth accumulation. If you found this video insightful, please leave a comment with your thoughts and subscribe for more content like this. Thank you for watching, and until next time.